Hey, what's up guys? It's Crypto Clay here with another YouTube video, and today's video is going to be very important because it's talking about how to keep your money safe when trading cryptocurrencies. And that could mean anything from trading on a daily basis all the way up to swing trading or hodling. All of that is going to be very vital information for anybody in the cryptocurrency market. So today I have 8 tips that I want to share with you guys that I've learned throughout the years of trading cryptocurrencies to stay safe, because we all make mistakes and we learn from them. Some of these things that are on this list are mistakes that I've made in the past that I would like to share with you guys. And so hopefully I can share these tips with you to make sure that you don't ever endure any of these mistakes, because at the end of the day, we're all in this community together. So regardless of whether you're a brand new trader or an experienced investor in cryptocurrencies, all of these tips are here to help anyone in between. So let's just jump right into it. Alright, the first tip that I have for you guys is talking about wallets. So hot wallets, cold wallets, and everything in between. Now, when it comes to wallets, there's a lot of controversy as to what is safe and what isn't safe. I'm not here to make an argument for or against any type of specific wallet. I'm just going to list things that I've learned about each type and what their vulnerabilities are, but it's going to be up to you whether or not you want to risk certain things when it comes to your money, because at the end of the day, you have to decide what your risk tolerance is. With that being said, let's go ahead and talk about web wallets, otherwise known as multifunction wallets or hot wallets. So web wallets are a way to store your funds online with ease of access. And what I mean by that is being able to retrieve your funds at any given second and sending it to wherever you want it to go instantaneously. So a lot of these web wallets, a lot of these multifunction wallets are designed for ease of access. They have very nice UIs. They are very easy to use for the beginner. But I know a lot of experienced traders that even use these because they're just so easy, and you don't really have to worry about any of the inconveniences of trying to figure out how much gas to send for fees and things like that. So web wallets make it very simple, very easy to use. Even some exchanges like Coinbase use these types of wallets to allow you to send and receive funds very quickly. The drawback to these is that they're usually housed on a server somewhere that could potentially be hacked. And if one of these servers were to get hacked, then you would lose your funds because you kept your funds on that server, essentially. Because at the end of the day, if you don't own the keys, the private keys to that wallet, then it's not really your crypto. And as the saying goes, not your keys, not your crypto. So I talked a little bit about this a second ago. Another type of wallet is an exchange wallet. And again, Coinbase is a great example of this, like being able to send and receive funds on Coinbase. It's a very easy type of web wallet to use on their exchange, and a lot of newcomers use Coinbase to get their feet wet in the cryptocurrency market because it's just so easy to get set up and verified and start using that exchange. But again, another one of these drawbacks for using an exchange wallet is if it gets hacked for whatever reason, you end up losing those funds. And I can tell you from firsthand experience that that is not fun at all. I had money on Mt. Gox whenever it got hacked, and I lost a lot of money from that. You know, even to this day, back then it was a lot of money, but you know, thinking about that money now kind of makes me sick. Like, to think about just how much money was lost in that hack. But then I made the mistake again 2 years later, putting money on Cryptsy and trying to day trade on Cryptsy. And eventually that cryptocurrency exchange went insolvent. For those of you that were around during the 2016 trading days, and it might have been 2015. Either way, Cryptsy eventually went insolvent because the CEO, the creator of that exchange, was basically funneling a lot of those funds into his own wallet. And this was after that exchange got hacked, and they didn't tell anybody about it. And they just tried to continue profiting off of the trades that were being placed, knowing that they didn't have the funds to back up what was listed as liquidity on the exchange. So again, exchanges, not a very safe place to store your funds, but incredibly easy to use, and it makes it a lot easier as well to place trades if you have your money on the exchanges, because if you see the market dipping and you want to place a trade to make sure that you can leverage out of that trade, then it would be very easy to do if you already have those funds on the exchange, because otherwise you have to wait for that transaction to post and have all of the confirmations that are required for that specific exchange. Next, we have hardware wallets, and honestly, this is probably one of my favorite types of wallets to use, just because it is a very safe asset to have. When you're using a hardware wallet, you're using it as a cold storage device for your funds. And when you store that on your hardware wallet, it immediately gets taken off of the web and is not accessible for people to hack. So you take those funds and you store it on a hardware wallet, and that hardware wallet has encryption built into the device itself to keep it safe for you. That is honestly the simplest way that I can explain hardware wallets. They are very, very good to use. I have had a ledger for years that I love. I know that there was recently a hack with Ledger on the web about all of its customers' names and addresses and things like that, their email addresses. And yes, that is going to happen whenever you purchase things online. Purchases online can be hacked. Like, if a company keeps all of those records of its patrons, then it's stored there online and it is accessible to be hacked. But I can assure you that the hardware wallets themselves are very capable of storing your funds in a safe manner. And your hardware wallet, regardless of whether or not your information got hacked on the Ledger website, your funds on that wallet itself are safe, and you should have no doubts about that. The last wallet that I want to talk about is paper wallets, and again, this is honestly, in my opinion, one of the safest ways that you can store funds, because you create a paper wallet and you store all of your funds on that paper wallet, and then you store that paper wallet somewhere safe in, a firebox, a safe somewhere that you have access to and will always have access to, and you just forget about it. honestly one of the best ways to get into the cryptocurrency market in general is to buy something and hold it for a little while and see if that specific project goes up in value. I know a lot of people who had Bitcoin back in the day, didn't know it was worth anything, and eventually came back to it to a large sum of money. So you could do the same thing with paper wallets. You could go online, create a paper wallet for a specific cryptocurrency that you like, send those funds to that paper wallet, store that paper wallet somewhere safe. Alright, the next thing that I wanted to talk about was password protection. And when I talk about password protection, I'm assuming a few things. One, you have a account set up on an exchange somewhere to do your trading. You have a wallet set up somewhere where it requires a password of some sort. So if you have either of those things, then you're going to require a password for whatever reason. If you have a password on your phone because you're using your phone as a wallet device, then this applies to you as well. So the best way to maintain a password is to create it and memorize it instead of storing it, because anything that can be stored somewhere can essentially be either hacked or stolen. So the best method to creating a password is to just memorize it in your head and always remember it. That way you have it available in your mind, easily accessible, right? Your mind is like the most accessible thing to you. But you don't want to necessarily write it down and lose it, because then somebody could find that and have access to whatever funds you do have accessible on there. So if you do have to store it, use something like 1password.com or write it down and store it somewhere safe. Like I talked about earlier with the paper wallets, you could write it down and store it in a firebox or a safe somewhere so that you know you can get to it, but nobody else can. And then my last tip for this is to make that password as difficult as possible. I know a lot of people like to use easy passwords because they know that they'll remember it as much as possible, but you want to make that password as difficult as possible so that people that, do this for a living, try and hack into people's funds, can't just easily access your funds. They have to take a very hard crack at retrieving your funds. So make them as difficult as possible. Use as many symbols, as many capital letters and lowercase letters combined with numbers as possible. And my tip for this is to install two-factor authentication wherever possible by using Google's Authenticator app. I have that installed on my phone, and it has been a breeze to use ever since I installed it. And if you lose your phone or get a new phone, it's easy to retrieve that Authenticator app with all of your applications on that app, as long as you have written down the recovery phrase somewhere. So with that, you would also want to store it somewhere safe. All right, next. 3, overtrading. So the first thing that I want to say here is that not everybody is qualified to be a day trader. Some people just don't have the knack for it. They're not cut out for it. In fact, most people lose money by trying to trade too much or too often. I think there's a statistic out there that says that 95% of all traders lose funds instead of making a profit. So with that being said, trading might not be cut out for you, but there are ways that you can still be considered a cryptocurrency trader and not trade all the time. You could swing trade. and basically make a profit whenever you see big moves in the market. So if one day you take a look at Bitcoin and you see that it's down 20%, well, maybe you could purchase that dip and just wait for it to go back up another 20% back to its previous levels and sell at that point and take some profits, or wait for it to continue going up and then take even higher profits. Things like that. You don't always have to be trading. And in fact, like I said earlier, most people don't make money placing a lot of trades. With that being said, be sure to check how much you're paying in fees on your trades. If you're paying more in fees than you're making on your trades, you're definitely over trading. And there's a few other identifiers to see if you're over trading. But that's the biggest one that I can tell you guys, is if you're paying more in fees than you're making on your trades, then you're over trading. It doesn't have to be cosmic. You don't have to be looking at charts all day, every day to make money. That's not necessarily the best way to do that in the cryptocurrency market. A lot of people think that you have to be staring at charts all day, every day, looking at news articles, seeing what the next fundamental pump is going to be. That's not the case in crypto. Sometimes there is no rhyme or reason why a cryptocurrency goes up 1,000%. It just happens, and it can be summed up by a whale decided to purchase something. And that's it. That's all there is to it. So please do not try and overtrade and make things complicated for yourself, because you'll regret the time that you've lost and the amount of money that you've lost. I can tell you that from firsthand experience, guys. Alright, number 4. Double check and triple check the addresses when it comes to sending and receiving cryptocurrency. This is a pretty easy thing to think about. Like, you might say, well, Clay, duh. Like, you want to check and triple check that the wallets match up. Yes, but I can't tell you the amount of times that I've seen people make this mistake and have lost an incredible amount of money. Another thing that you have to look at is whether wallets are compatible with one another, because for things like stablecoins that are housed on multiple different blockchains, you have to look and see from the exchange side what blockchain that stablecoin is housed on to send to that blockchain's wallet. Like, you don't want to mix and match, because then if you accidentally send the wrong transaction to an incompatible wallet, then you've lost those funds. So you really want to pay attention to what it is that you're sending. And the tip that I have for this is send small amounts before sending an entire transaction for the new wallets that you've set up and never used before. And that includes exchanges. So, like I said before, not all wallets are compatible with one another. So if you try sending to an exchange that you've never sent to before, make sure that you only send a small amount before you send a very large amount, because you don't want to lose those funds. Alright, number 5, and number 5 is a doozy. This one is scams. You want to stay away from scams as much as possible. And the way that you do that is, these things that I have listed below are just some of the ways that you can look at something and realize if it's a scam or not. However, there are a lot of snake oil salesmen out there that have a lot of great things to say, but at the end of the day, all they're presenting you is a scam. And a lot of people are going to fall for cryptocurrency scams because we are still in the wild west of crypto. But do these things to make sure that you are keeping yourself as safe as possible from these scams. The first thing is to stay away from anything promising a return. Nothing in crypto is guaranteed, so anything that claims that, yeah, you're going to make this amount of money each year, that is complete garbage. Nothing, absolutely nothing in crypto is guaranteed. The only thing that I could think coming even close to guaranteed is having stable coins on an application like BlockFi or Celsius Network that offers a guaranteed percentage rate on that. But again, that's a stable coin, and either of those platforms could go bankrupt tomorrow and you would lose everything. So keep that in mind. The next thing is, don't be sold on a project the instant you hear or read about it. Dig into the team behind the project. You want to enwrap yourself in everything about a project before you invest in it. And that includes taking a look at the team behind that project. For instance, I invested in a DEX a couple of years ago, back in 2017, I want to say. I invested in a DEX that was going to be the next best Bitcoin DEX, and it was going to have all of these incredible features, and everything was going to be top-notch. Well, come to find out, the team behind that project was not who they said they were, and they ended up exit scamming with everybody's money, and they raised a considerable amount of money. So you want to be sure that you do a lot of research on the teams behind these projects. I did not do my due diligence with that, and that was completely my fault. I was making really good money on crypto back then, and I wasn't doing enough research to say, hey, this is a shady project. So please dig into the teams behind the project. The next thing that I want to tell you guys is no one in technical support on any social media platform will ever message you first. So be wary of anyone that messages you on Telegram or other messenger apps, because there's not a single person in technical support that is going to message you first. You always have to message them if you want technical support with any type of project or wallet or whatever. So if somebody messages you, be sure to reference that with the actual technical support behind whatever project it is that you're asking questions about. The last point that I want to make is to never tell anybody how much of an asset you own, because that knowledge is very exploitable. If you tell somebody how much you own of something, then it can easily be exploited online. You know, people can blackmail you, people can try to steal your funds, whatever. By telling people what you own, you're making yourself a target. So try not to do that as much as possible. The tip that I have for staying away from scams is, if it sounds too good to be true, it's because it is. BitConnect sounded great. A lot of people thought that it was going to be the next best thing. Well, we all saw how that turned out. There's a new project out there now created by a very shady person called Hex that makes all of these great promises for potential growth. Just try and stay away from that sort of stuff, guys. Alright, number 6, investing in the wrong things. If you're having a hard time understanding something, it's clearly not the right investment for you. And I'm not trying to say that to sound pretentious and say like, oh, I know everything. Trust me, guys, I am not an expert in anything. I don't claim to be an expert. But I try to stay away from things that I don't understand. So if something doesn't make sense to me, it's probably over my head, and if it's over my head, then it's going to be over a lot of other people's heads as well, and they're probably not going to invest in it. If something is way too technical and way outside of your scope, then the average person's probably not going to invest in that. And something else to go along with that is, if something sounds way too technical, it's probably because whoever is creating it is either trying to make it sound technical because they want people to invest blindly and then maybe exit scam, or the team behind that project just doesn't have any good marketing people on their team. And again, without a good marketing team, then chances are the project is going to fail anyways. But if something is too technical for you, but you still are thinking about investing in it, then ask questions. But if you still don't understand after asking questions, then just move on to something that you do understand. These projects can be very technical, and they're not for everybody. But find something that you do like and that you do enjoy and you want to put your money into it. My tip for this is Google, Medium, YouTube, and GitHub are your friends. If you can't find the information that you're looking for on those avenues, then ask somebody in the community. If they can't help you, then ask somebody on the team. And if they can't help you, then just move on. Number 7, investing too much. I've seen this so often in the cryptocurrency space where people are so stressed with the amount that they've invested that they can't sleep, they can't eat, they're always worried, they're always looking at their phone, they're always looking at their computer, they're just always worried. If you're having any signs of fear or doubt about an investment, then you've invested way too much of your money. Do not do that, guys. Please do not do that. There is no reason why you should always be in fear of something, especially something like money. This market is incredibly volatile and there will always be plenty of ups and downs. So, with that being said, it might feel like a roller coaster sometimes. Sometimes you might feel very fearful of the fact that the market has dipped, but there are always going to be dips in this market. That's just the way the cryptocurrency market works. There's going to be dips, and then there's going to be new all-time highs. That's the way it goes. But my tip here is to never invest more than you're willing to lose in crypto, because at the end of the day, all of this could go to zero. You have no idea what the future holds for cryptocurrencies. So please, please, please think about the amount that you're investing into something before you invest. My last tip that I have for you guys kind of coincides with things that we've already talked about on this list, but I can't stress this enough. I get asked all the time what I think about certain projects, and I ask these people, well, have you looked at the project's website yet? And I get blank stares back at me. Guys, there will be plenty of experts out there that try to tell you what the next big project is. Tune those people out. It's your money at stake, guys, not theirs. So please, 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 do your own research. I can't stress this enough. Everybody is going to try and sell you the crypto that they're currently invested in. It's your responsibility, though, to go to the project's website, take a look at that, take a look at their Medium posts, take a look at their Telegram, take a look at their Discord, whatever it is that they have available for you to look at and start studying that project. That's what you need to be doing. Take a look at YouTube videos that the team themselves put out, because a lot of these big YouTubers now have done just ridiculous jobs at trying to make their videos stand out, and they make them very scammy looking, very clickbaity. Stay away from stuff like that. That's not what you want. You want to look at the facts and the data. And that's what you should be basing your investment decisions on. You shouldn't be basing it on clickbaity titles or, clickbaity thumbnails on YouTube. The first place, though, to see if something has a thriving community is Telegram, like I was saying before. Telegram is a great place to see how the community is to start off with. For instance, I can tell you that one of the projects that I recently invested in within the past year is Harmony, and their Telegram group is always active, and there are tons of people in there that are very ready and willing to answer any and all questions. I love the community there, and you need to find stuff like that to help you and guide you in the right direction when it comes to these investments. Because if a crypto project that you're looking at doesn't have a thriving community, then chances are it's not going to be a good project to invest in. But once you go on their Telegram and realize whether or not they have a good community, from there you're going to want to review their website and start asking questions. And the tip that I have for this, the last thing that I want to say about doing your own research is, if a project doesn't have much documentation, it's either brand new or a potential scam. So you're going to want to stay away from stuff like that until there is documentation on it. And if there's not documentation and it's brand new, but you still are thinking about investing, then that's whenever you're going to want to start asking questions in the community and to the team behind the project. So that's it for today's video, guys. I really appreciate everybody who watched this video and stayed to the end. Hopefully some of these tips come in handy for some of you that are out there trading cryptocurrencies on the daily or weekly or monthly or yearly. This is a list that has been coming for years now that, are things that I've thought about personally and I've seen other people experience. So hopefully it helps some of you out there. But if you enjoyed today's video, then please be sure to subscribe to the channel. And if you liked the video, then please go ahead and like the video. That's going to be it though for today. Thanks again, guys. CryptoClay out.